Howdy everybody, Brian here from quantlabs.net. Today in this video I am going to talk about a back and forth I've had with somebody who's highly experienced as a US stock trader, thinking about potentially flipping over to crypto. So let's get started on this. He's also working on a pretty powerful Excel spreadsheet as well. So we're going to start off with some of the comments here. What I mean is that volatility, tide, and liquidity plus volume and accumulation distribution real time can detect what is affecting intraday price moves and or index exchange is most active. But overall, there's an anomaly factor, which is when the price bid-ask suddenly flips, or you have high volatility in the index but little price action, and or the spread widens as with 1,000+ point moves in March. That was no accident. You know as well as that history shows 2008-9 Wall Street trading halted with this much volatility. So my response to that was Binance allows you to see actual executed orders for bid and ask an appropriate side volume by or long and short. Without this data, you're only guessing due to the whale traders, market makers quote stuffing. I've also verified if mid-price or midpoint works in what scenario. So essentially what I'm saying here is when it comes to any commodity exchange like the CME, CBOE, and the large global stock exchanges, you will not get access to actual executed data, which is really important because that's what you want to watch and make sure you're watching. I put out a video on that. I'm curious, since fundamentals earnings don't reflect the price move, such missing forecast but spiking up to a new, what inputs are actually driving this? We have EPS, revenue, cash, sales to consider. Can we put this in normal distribution basket to predict the way price is going to react when earnings are released? There's really no fundamental news in crypto. This is what I say. There's no fundamental news in crypto that can be used as a leading indicator. I've looked at the blockchain info as well, but that seems to be where you look. I could not find anything that's predictable. I could be wrong. So I've talked about that a few weeks ago. Is there a correlation between Bitcoin and the exchange indices on what is tracked? There is no exchange indices. I mean, the only ones that I've seen from a professional allocator is majority, they say 50% Bitcoin, maybe 10% XRP, 10% Ethereum, and then some other smaller alternatives with lower allocations. Given the S&P market capitalization, nearly 25% from 5 tech companies, all with offshore tax haven accounts. So essentially what he's saying here, what's driving the markets right now are the big tech companies, the FANGs, Facebook, Apple, Netflix, Google, maybe Microsoft, Amazon, are all driving the markets up. But when you look at majority of the mid cap, small caps, they're suffering right now. So I responded, there may be a correlation with institutional money pouring in. This is the crypto market. With futures and soon options of crypto markets on Binance, it seems to be spread over the place, which is very hard to track, which is true. You can sort of track the futures market now versus the spot market. But majority of it seems to be going into the futures market, and with some of the big exchanges, it's hard to track what goes where and where it's coming from. I mean, you get better data, and then you also have these options now as well coming in on Binance, which really doesn't make tracking and predicting easier. Has the market broken from our economy? Passive investing volumes do not reflect most of its constituents. Eventually, the PE ratios will be skewed. So what I said here is all forward guidance metrics you depend on will no longer be used as the markets get worse. If you have not been on my Facebook programming group, there's already big, large hedge fund managers saying there's going to be another big crash coming. As well as the CEO of BlackRock said it does not look good. He actually used the word dire. So all these things that people have used as forward guidance will eventually be thrown out the window. And it says also it seems that 25% of U.S. companies are no longer offering forward guidance or dividends. So when things look bad, they're not going to offer what we used to use. I mean, there will be some other companies, but it'll be harder and harder to gauge forward-looking data in market prediction, especially in the U.S. Probably the same could be said globally as well. So here's a really good example of why the U.S. stock market sucks. Let's see here. In the case of Tesla, the orphan child of the market, yesterday I bought 35 shares of Tesla at the open, made 568. So TDA's TD Ameritrade charges me 9% plus a payment order flow, PFOF. I know nothing on this, but again, this guy knows his stuff. On the cash sweep balance, if I hold it into extended hours, right, okay, that's the extra fees. I can eliminate a 9% interest fee not related to margin, initial maintenance, by shorting Tesla the same day and closing before the market ends. Tricky stuff. Now, because the crypto market's never closed, specifically on crypto, all you really worry about is the simple charge, especially commission rate on Binance is only 0.1%. So that is pretty low. And that's on each side of the trade. It makes even tighter scalping pretty profitable and consistent. So I have some of the bots that do that. So Tesla was driven down by $62 claim for because his comments then flattened out on extended hours and then resurged upward next morning and continued to trend within 22 hours, currently up to $64 since yesterday's open. And my question is, can you always predict this unless you use price with raw metrics only, meaning traditional, I guess, technical analysis or quantity math sort of stuff? Because, as I said, a lot of people are using these forward guidance metrics that are more and more less reliable, and more being taken away from the big stocks because they're not issuing the guidance. Looks like a hype-driven market. In terms of fundamentals, Bitcoin has nothing to lose in the upcoming crisis. No income, no debt, and its future adoption does not depend on happy and confident consumers, just the opposite, in fact. That's true. The other big thing that is nobody owns Bitcoin, and it's becoming decentralized, so nobody can get rid of it, nobody can turn it off. The only thing that governments could do is to control the access points to be able to get to it, and that's it. I respond with, I agree, becomes an alternative to get returns in this bad market. If you're not seeing the latest upsurge, I mean, last week it was $1,000 went up, and today it went up immensely as well. So then here, I posted this Instagram post. Let's see if I can play it actually. Okay. All right, let me just play this video. This is really important. So I posted this 5 days ago. Hello guys, Brian here. We are doing a comparison of USO oil, BTC, Bitcoin, gold, GSP. Here's the returns over 5 days where Bitcoin's on top with a 33% return. That's a 1 month. You got a 5 day now, and you can clearly see that Bitcoin is yet again on top, being at 16%, while the other ones are nowhere close to being even 1%. So where do you think you should be putting your money? Hello guys, Brian here. So again, that right there is basically that Bitcoin alone, and majority of obviously the crypto space, the top returns of the last month up until 5 days ago, and we're not including the upsurge today. It proves that crypto is always on top of the big ones, the safe havens like gold, the safe haven or U.S. oil as an ETF, as an oil market for energy and other commodities as well, and then the stock market as well. So Bitcoin has, for the last number of days, and if I showed you the year to date on some of the other coins that have doubled with 150% return year to date, the question is, again, as I said here, why blow your brains out on subpar returns compared to crypto over 5 or 30 days? Now you see why I only trade crypto. There you go. The only awareness of this combined heightened media attention due to the upcoming halving could be one of the reasons behind this week's recovery. That's true. or perhaps is being swept along the wave of inexplicable optimism in traditional markets. That's possible too. Again, we don't have that knowledge to quote unquote dabbling in crypto and seeing it. He put out a filing on that in a very subtle uh, sentence or two about what they're planning to do, and that was gone back to, I think it would be the SEC, the hedge fund. So even the big boys are moving into crypto now. So as I said, who knows? The halving. Yeah, read this. So I talked about the halving here. I said, it's fine to talk about it. It's like today, Wednesday, May 6th. It's predicted to happen May 9th. So once it happens, it will go down. There's no doubt. But then what will happen after the fact? I've done an article on it, even more. But these halvings make Bitcoin less scarce and more valuable as people look at it as the liquid digital gold. This halving, the third one, has coincided with a strong run up on Bitcoin. What is going to be the price structure? Supply side based pricing, stock to flow. What are the fees involved in buying and selling Bitcoin? As I said, you can get a future contract with on the CME. You pay outrageous margin requirements, but it is going up. You can also buy it through CFDs and whatnot on these crappy retail forex brokers. But where I would recommend is go on the legitimate coin, the crypto exchanges like the ones most talked about are Kraken, Coinbase for US, or in my case Binance. There's other ones as well, Asian based, that I don't really trust. But that's where you can get really involved in it, buying and selling on that particular exchange, as well as we've talked about the fees already on Binance. So here's more stuff I'm going to respond to. All right, so hopefully I haven't repeated this. So what I mean just came out yesterday, this email. What I mean is that volatility tied in with liquidity plus volume and accumulation distribution can detect is affecting price moves and or index is most active. But overall, there is an anomaly factor, which is when the price bid ask suddenly flips over and you have high volatility but little price action, or the spread widens, as with the 1,000 plus. There is no, as well as history shows. Yeah, okay, so I've already talked about that, I believe. Yeah, okay, so I've already talked about that. Some other things is if you have seen in the last couple of weeks, I'll even say a couple of months, that the bid ask has been tight, and as he says, it's been little price action. That's why I got the different strategies in place to give you the opportunity. It's up to you if you want to trade it or not in the client software. Looks like I've covered a lot of this. So right now, the markets are going up and they're doing well. But even if they're going up, as is shown you in that Instagram post, they still don't compare to Bitcoin and other crypto. Bitcoin's the standard, but there are other coins that have moved up quite a bit. Let me see if I can find any here. Okay, so this is the new bot I'm working on. Let's see if there's any. Okay, so let's see if I can give you some stats here on other coins. So this one is mind-blowing returns since year to date. We've got portfolios that are getting knocked down 30, 40% year to date. So here we're up. Let's look at some other ones. So let me check out the USD ones that are out. These are going a lot of these are going to be really small. This is one. All this data comes from just general if they're crypto performance. So it'd be similar to get this on Binance. So let's look at year to date. So here, look at this again. Okay, so here we're dealing with Bitcoin up 30-day, 31%, Zcash 23%, VeChain up 24.92%. That's over 30-day. So you can see the volatility is pretty crazy. That's what we're tracking. But some of them have done fairly well year to date. We are looking at Bitcoin up 26% year to date. And as I said, there's certain ones that are outperforming Bitcoin. You can see here Zcash. This one called Mainframe. Binance Coin, 21%. Some of, well, look at this one, Bitcoin SV, 116%. That is crazy. Year to date. Year to date. All right, let's look at one more. All right, this is in the Ethereum market, just some samples that are performing Bitcoin. So there's going to usually be ones that you've never heard of. So I don't expect really big ones, but you get this NAV coin, 32%. These ones are not so strong. Power Ledge, year to date. Okay, so yeah, Power Ledge up 50%. But the idea here, look at this, year to date, Power Ledge is up. That's probably the highest I've seen year to date of anything yet. There's some negative ones here. Binance Coin 21.9%. So certain ones could do really well. It's got to know how to pick them right. But I just want to show you that crypto is easily the number one asset class out there, bar none. That's why I only trade it. Hopefully this will help you out. Thanks for watching. Have yourselves a good day.